Good afternoon, everyone. We will wait for another 30 seconds. We are expecting more participants to join. We will start this session at 3:34, 4:34 sharp. Once again, very good afternoon, everyone. Thanks for joining Stock Durbar with Team MarketSmith India. We will start this podcast or webinar by discussing about a few broader market indices, Nifty and other sectoral indices. We'll try to analyze the price volume action of these indices. Then, in the later part of the session, we will be answering stock specific queries from the ONL's perspective. So, for the first 10 to 15 minutes, it's going to be a one-way monologue where we will be discussing about the indices. Then, in the second half, it is more of interactive session where participants are expected to put in their questions related to stocks or any O'Neill's methodology question, and we'll be taking our time to discuss those queries. First, let's start by looking or analyzing Nifty's daily chart. As you can see here, this is the Nifty's chart taken from our website, and today's candle is also updated here, which is Nifty closed 0.22, 0.3% higher today. As you can see, or if you are following markets, you would be aware of that. Nifty is trading at all-time highs, which is a very positive sign. There was some volatile action during the election results, which happened here. And that particular day, Nifty was highly volatile, but that sell-off was quickly paid by the index in the within the 2 to 3 trading sessions. And Nifty hit another all-time high, and that is reason we change the market status to confirmed uptrend. We are still in confirmed uptrend with a distribution day count of 0. There have been no instance of distribution day occurrence since changing market status to confirmed uptrend. Distribution days help us to track weakness in the market. Uh, it's the benefit of everyone. Distribution day is when a Nifty declines 0.2% or more on volume higher than the previous session. That signifies that there is selling pressure happening took place in the index. So that will be considered as a distribution day. And if there is any accumulation of distribution days, that is occurrence of distribution days consistently in a quick succession, we'll consider them. And if the count elevates to 3 or 4 and Nifty breaching of key moving average, will trigger us to change the market status to under pressure. But currently, there is no sign of major weakness in the market. We are pretty much doing well, Nifty as well as the broader market indices, which will be looked upon in the next minute or so. Coming back to the Nifty, and as it is trading at all-time highs, it is very clearly trading above its moving averages as well. Going forward, this 21 DM and 50 DM are going to be crucial for the index. If those levels are breached on the higher volumes and Nifty adds a couple of distribution days, we might change the market status to under pressure. But until then, we continue to stay in confirmed uptrend. Moving on to key broader market indices, first is Nifty Mid Cap 100. In the in these indices, today's candle is not updated. It will be updated around 5:30 to 6 around that time. So until yesterday's, we have the data here for the broader market indices and sectoral indices. But today, Nifty Midcap has closed in the positive territory, and it is also very similar to the Nifty's action. It is also trading at all-time highs. Not just large cap stocks, the broader market, that is mid cap and small cap stocks, are also doing very good, which is a very positive sign. That is constructively overall Indian market is doing good. Broader market, not just concentrated stocks, that is overall market is breadth is towards the positive sign, which is a very good sign of strength in the market. Moving on to other index, that is small cap index. It is also very much similar to the Nifty and mid cap index. Both you can see here that this index is also trading at all-time highs, and this index has given very good returns for the investors in the last 1 year. If you look at the overall trajectory of this index, it has done very good. If you compare from last June to now, it is from 10,000 levels, it has moved to 18,000 levels. That is almost 80% of gain, which is phenomenal for any return wise. If you look at it's a phenomenal for a benchmark index. Moving or giving such kind of returns is not very common. It is very rare if you to find these kind of returns. And also we'll move on to few sector specific indices to see how those sector indices are placed. Uh, Nifty bank or financial index has the highest weightage in the Nifty. So Nifty bank movement is clearly a very good criteria to or very good factor in terms of overall market performance. It is more high volatile when compared to the other indices which we have seen currently. Even though it is trading at all-time highs, but the volatility is higher when compared to the broader market indices and the Nifty index. If you compare the volatility and the average trading range of candle, if you look at it, is slightly higher in top in the banking index. Especially PSU banks have done very good in the recently. If you compare with the private banks within the banking space, that is majorly because of reforms done by the government and management teams of the respective PSU banks. The important and major focus of the government or the management is to bring down the elevated NPS in the PSU banking space. That has been done very good, and there is very good recovery in the very good improvement in the asset quality. That is one of the reason for the PSU banks doing good in the recent 1 or 2 years. Look into IT space, that is Nifty IT. This is one sector which is very agnostic toward the current market. This is not trading at all-time highs. This is majorly because IT, that is the growth is driven by the export market. Most of the IT sales happen in the uh, other countries and rather than in domestic countries. The consumption is in the Europe or in the Americas, that is in the developed countries. If you look at the IT sales, so overall, globally, the IT spendings have come down. That is a overall theme that is been observing. That is one reason for which the IT index is under performing, or you can say it's a laggard in the current market. Pretty much so, because the technology wise, if you look at we are in services sector, but if you look at the overall technology in the global perspective, not just this normal services, but the artificial intelligence and machine learning has been taking a top seat, if you can say, and that has been a major focus and a major research area which is being driven. And the Indian companies needs to adopt to those technologies, and the R&D spending has to increase in order to give competition to the global players. But if you look at or compare with the US markets, US IT sector has been doing very good, and stocks like Nvidia and other chip manufacturing companies have been making news for the positive reasons. Recently, Nvidia has been become the biggest company in terms of market capitalization. The market cap has increased or overtaken Microsoft. uh, it is almost the market cap of Indian overall economy. That's the size of Nvidia company. That shows the amount of research and the company's ability in terms of R&D and valuations the company is able to enjoy. So there is a very big scope Other Indian companies as well, stock companies like TCS, Infosys, Wipro have been doing very good for the last 10 to 20 years. But for the future developments, the focus should shift towards the upcoming technologies so that they give competition for the global players as well. Let's move on to other key index that is Nifty FMCG, that is fast moving consumer goods. Uh, this index is also not trading at all time highs. This is slightly below its all time high. If you look at election day result or election day trading, this index has closed in the positive territory on the particular day where the results were announced. That is very opposite towards the overall market where the Nifty closed at record lows in terms of the decline for a day, and other indexes are also closed pretty much lower. But this index, because of strong domestic consumption, which is still intact, the growth story of India is still intact. So that is the reason it is being held, even though the overall market is not doing good. So you can say it's a defensive play in terms of when the overall global economy is not doing good. FMCG might will or is expected to do good because the consumption in India is still on the higher side. With in terms of per capita levels, we are still very less in terms of the vitamin levels or the calorie levels. Or the quality of food we take is slightly on the lower side when compared to the globals. And if the research is done in this sector as well, where uh, food or the productivity, if the per acre is increased, definitely we are going to do good in the overall pharma and sorry, in the agriculture space. Once agriculture space is done good, the overall economy of India is going to do good because the majority of the population is still in agriculture sector. And once these players or the participants who are in this sector have adequate money to spend, then the overall spending capacity will increase, and you see consumption driven sectors doing good in India. We'll look at Nifty Pharma and then we'll move on to stock specific queries because these are the major indices which have good weightage. There are other indices also where Nifty Media, Nifty Metals, Realty have been trading, but those indices have less weightage in the overall market. So the questions related to those indices come up during the Q&A session. Definitely, we'll be taking those questions as well. Nifty Pharma has also been doing very good in the current market. I can say it is. You can say that it is trading 1 to 2% within the range from the all-time highs. So there is no major selling happening in there. It is clearly trading near its all-time highs, and market status is also in confirmed uptrend. They are still. It is trading above its all key moving averages. If those levels are breached, we might see selling coming in, but still 21 DMA is 1.5% from here. This is with respect to yesterday's closing, but there is still a long way to go for the other moving averages such as 50 and 100 DMA levels. 50 DMA has been a very good support for this index for the last 2 to 3 months. In the future as well, we expect these 50 DMA and 100 DMA to give support for the index. So most of the indices which we looked at and the broader market indices, mid cap and small cap, most of them are doing good and most of them are trading at all-time highs except for Nifty IT index. Other than that, all the indices are pretty much doing good or in the similar terms, just the magnitude of gain or loss is, but the overall direction, if you look at, is clearly on the upside. And we can say that overall, if you compare or if you take all these sectors into perspective, you can say that Indian market is doing good at the current moment. And once the market is in confirmed uptrend, we expect the overall stocks in the Indian market also doing good. At the end of the day, market is nothing but culmination, or you can say summation of all the stocks in the market. So 70 to 80% of the stocks are expected to do good in the current market. And the breakouts you see very often in this market, very uh, and the probability of those breakouts being successful will also be on the higher side in the current market. And that is the reason we have been adding stocks to portfolio, and we have been scouting for stocks which are doing good and which are breaking out from the base patterns on above average volumes, as well as stocks looking good on fundamentals and technicals. I think from now, I think you can now start posting your queries in the chat box. We have in this room my colleagues Roshit and Wakar also joining this session. We'll be answering your queries one by one each, and any leftover questions, we do not intend to leave any questions unanswered, but due to the paucity of time, this session is around 1 hour length, and due to the paucity of time, we might not answer all the queries, but the overall objective that is here is to analyze any stock from the owner's perspective. And if you have been following our webinars or seminars, you will be also have that adequate or knowledge to analyze any stock from the owner's perspective yourself as well. That can give you a long way or take you a long way in the investing journey.
Thanks, Raj, for taking us through all the basic Nifty as well as the sectoral indices. Now let's go to stock specific queries. We'll start with Avanti Feeds. So Mr. Rupesh Shah has question on Avanti Feeds. So it recently broke out from the base. If you can see over here, it's as Raj is indicating, it's a stage one consolidation base, but a stronger one. And if we look at the financials on the left side, so since last few quarters, the EPS growth has been really decent one, plus the sales growth is also good. So it clears that filter. The second thing, the number of fund, yes, the number of fund holding the stock has increased. Some decrease in the shares held by fund, but broadly there are more and more funds now getting invested into this. It still requires a couple of good results to improve on the EPS strength. But if we see that the last few results have been competitive, they have been really good, then we can consider it, even if we see that there is a bit here and there in the EPS strength overall. Otherwise, the price trend is really good. As Rajas indicated, it is at blue dots over here. That means the price trend is at a fresh 52 weeks high. Okay, and currently it's a bit extended, 6% from the pivot. So what you can watch out is for if it falls back to the buy zone, and once it falls back to buy zone, it again वहां से एक reversal का sign दिखाता है, then that is the ideal time to go for this stock. Otherwise, the fundamental, technicals, as well as the growth drivers are well in place. So it got some momentum due to this election result as well. So the company headquartered in Hyderabad. So as the Raj is indicating, the 3-4 sessions, some quick move over there. That was due to the election and the party belonging to the Hyderabad and the Andhra Pradesh being a key role in the center as well. So that is why we saw some momentum due to some political news over here. Okay, so now let's go to the next question. And we can take Balu Forging. If please limit your question to one or two. That will help everyone in the group. So yeah, forging stock doing quite well. Okay, so over here also the fundamentals have been really good. If you can see the EPS growth, the sales growth excellent. The EPS of 90 is among the top. The price strength of 80, buyer demand of A. So all the technical indicators good. Even the group rank is among the top 40 with a blue dot. So that means the RS line at a fresh 52-week high. So here there was some volatility. पहले एक कप पैटर्न बना था, वहां से ब्रेकआउट हुआ था, but it didn't sustain. It quickly failed, and it did fail. Stop loss भी लग गया. Even I think वो election result वाले दिन 200 DMA भी intraday breach कर दिया. The black line over here is 200, but then it recovered quickly, and from there it started the upward momentum. What I didn't like particularly about this upward momentum is the volume. So volume not that good since last 8 to 10 sessions when the stock has recovered really well. You want a bit high volume recovery ideally. So see the way it has formed the right side of the cup base. You just look at the volume that Raj is indicating. Very strong volume and a good move. If something like this comes, then that is what you always want near pivot. So your breakout to hua hai, but without a volume, you can't consider it exactly as a breakout. It is just like it has crossed the pivot. That's what you can consider, right? And even today, it gave a huge move, I think 7-8% move. But see the volume was 42% less. So not a ideal sign to watch out for. But yeah, overall the story, the sector tailwinds are really good. Plus the fundamental fund holding has been well. So once it completes this consolidation, एक बार फिर से buy range में आता है or it gets pulled back. Generally ऐसे cases में whenever you see there is a low volume rally, the stock might pull back to its 21 or 50 DMA in near term. So once that happens and when there is a rebound from those levels, you can reconsider it for the addition. Okay, next we can take is Cayens. A clear disclaimer that this stock is part of our model portfolio. It was added on June 10th when it rebroke out from its cup base. So very good story. Electronic manufacturing players have been doing really well in India. You look at any name, you look at the Dixon, you look at the other names as well, the Kayans, they are their fundamentals are improving, their order books have improved, and the way the China plus one thing is playing, the local mobile manufacturing in India, the local electronic devices, white good manufacturing in India. Okay, so everything is playing out. The PLI by the government, the continuation of the government, the continuations of most of the ministries. So this will add a lot of it. So there has been a lot of comments from the external ministers as well that we are importing a lot of electronic goods from China, and we want to now shift our focus to more and more made in India goods. So, right, as far as the electronic sector is concerned, so these listed companies who already have a well-established manufacturing units, well-established clientele base, they are bound to be benefited. So it's a long-term story, and the technical reflects it. So it went through a bit longer consolidation. If you see it, first it made a cup base, then cup with handle, then again cup base. So since last 4 to 5 months, it has been moving sideways broadly, but it has never breached its 200 DMA. You can see 2400 के around 200 DMA से वापस rebound हो गया था. And then after the addition, on June 10th, you have seen that there has been a decent rally in stock, and our profit is almost around 12 to 13% in the stock in less than 2 weeks. So fundamentals are good, fund holding is good. Overall, the sectoral tailwind and story remains good for this sector. Fresh addition at this level not advised, but those who are holding the stock, they can definitely continue to hold. Over to you, Varun.
Thanks, Rushit. Yeah. Can you give me chart for EID Perry, then MPS? Certain sugar-based stocks are in momentum, and similarly, you can see EID Perry as well. And the good part is that a blue dot has been formed. I mean, it's getting formed for the past few days. The breakout has been very strong, and even on the election day, you saw that the stock found support near the 21 DMA and has rebounded very well from there. Overall, EPS strength, is declining because of the last few quarter results, as you can see, because we are kind of achieving our blending targets. And after that, the overall uh, demand is not that great for the sugar front, and that is why you can see the last even the realizations have not been that great. So you can see numbers falling in the last couple of quarters, and but fund holding is still there. The price action is there. Over price and volume action is there, but the fundamentals are kind of deterring at this moment. So that is kind of a weakest sign. But still, if someone is invested or just looking at the technicals, can stay invested. As the stock has kind of hit the ideal profit booking zone. If you feel that the overall stories is not that great, or there is some deterioration in fundamentals, or you want to partially book out profits, the stock is, there around in the ideal green zone where partial profit booking or complete profit booking can be done. If your the risk reward ratio you feel is still there, and you want to hold the stock longer, then keep the 21 DMA as the trailing stop loss level, and move further, because overall technically still the stock continues to remain very strong. Price strength is improving, buyer demand is at its best, and there is good big volume bars coming in when the stock is moving higher, even big red bars as well. So the only thing I can look and say is that the stock will remain volatile, but the amount of risk you want to take within your portfolio will depend upon you, and we've given an analysis about this. The next is MPS. MPS. Raj. Thank you. So the stock has provided a strong breakout, and as you can see, when the stock was moving higher within the right hand side of the base, and even after breakout, good volume bars were coming in. So that is a very, very good sign, as you can see. Currently, the stock has gone above the 0 to 5% buy zone. So the blue zone, as you can see, the stock is still moving above that. And if someone wants to probably make a re-entry, wait for the stock to cool down, come into the ideal buy zone, find some support, and then move higher. That would be probably be the ideal thing. Overall, last 3 quarter results have been very good. As you can see, fundamentals are improving, and similarly, you can see in some time we'll see the EPS strength or the EPS rating also improve. Fund holding is slightly improving. It's there. And if you look at now from the technical front, now when the stock is consolidating, it's consolidating on lower volumes. So which is a good sign. If someone is had invested at the breakout, can continue to hold, can keep the 7 to 8% stop loss, or the 21 DMA as their trailing stop loss levels. Overall, it's looking fine at this moment to stay invested if someone is invested. But since it is above pivot, would not be advised to chase the stock and buy it at this moment. Buy it at the current price levels. The next we can go about it. Just give me a second.
Which one? Okay.
HAL. Defense. HAL stock. HAL. Hindustan Aeronautics. So the stock was very volatile, as you can see, around the day of the budget and after that as well. But as you can see, most ministries were handed over to the previous ministers as well, who had done a great job in the past few years or in the past term. And that is why you can see after that the stock moved higher with above average volumes. Overall, if you look at it, is I mean all the ratings, EPS strength, price strength, buyer demand, everything continues to remain superlative for the stock. Even the last 4-5 quarter results are good. Return on equity at 20%, 26% is very highly superlative. Number of fund holding is increasing still, as you can see with this tremendous amount of gains, even from the last breakout or the last base that the stock formed. The stock is more than 166% up from pivot. And over the entire timeline, as you can see during the rally, the stock never breached its 50 DMA. And even during the big down move, it found support near the 50 DMA. So currently, new position into the stock is probably not advised. Someone who's holding the stock from previous levels can continue to hold and keep probably 21 DMA as their partial profit booking zone and 50 DMA as the complete exit zone, because during the rally that has not been breached. So if that gets breached, that means that there is some kind of big volatility coming into the stock. The major thing for the stock will probably come with the budget, in terms of there was for the last few budgets, there was always good announcements with regard to defense as an industry. So if those kind of proactive initiatives continue, then probably the stock will benefit, the industry will benefit, the stock will benefit. But if the allocations tend to go down, then maybe there can be some kind of jitteriness in this stock as well.
Thanks, Vakar. I'll take a few queries now.
Yeah.
Let's look into Biocon's stock. This has been announced on the YouTube platform, which is it is limestream. This stock has also broken out recently from the stage 1B consolidation, and from there the similar action for the most of the stocks, huge volatile moves around the budget. From there, strong recovery has also happened in the stock. Currently, it is extended from the pivot. You can say it is more than 12% up from the pivot, and it is clearly an extended stock. You could say fresh positions at this point is not uh, advised. And if you look at the ratings, EPS has been on the lower side because last 3 quarters there has been a degrowth, that is declining EPS number, even though the sales have grown, but the growth rate has been in the single digits, which is not a good sign. We would like to see double-digit growth rates in terms of both sales and EPS, because we are a momentum based or growth stocks investors. So we would like to see stocks or companies reporting 20 to 30% of growth consistently for the last 3 to 4 quarters. On the EPS side, it is on the lower side, and the technicals have also been on the slightly on the lower side, you can say, because of a slight underperformance of the stock compared to the overall market. EPS is at price strength is at 64, but the positive sign is that RS line has made blue dots, which is very good sign, and momentum has also come in for the stock. Buyer demand is also good. You could say that the B plus is a positive rating in terms of accumulation and distribution, that shows there is accumulation happening in the stock when the stock is advancing higher. Fresh institutions are taking positions, you could say. But if you look at the number of funds, it is telling a different story slightly. In the last quarter, there is slight decline in the number of funds. Around 1.5% of the funds have been come out of investment in this particular company. So overall, it's a slightly mixed, you could say. Ratings are pointing on the downside, but the stock performance is good, and also it is extended. Though, so the fresh additions are not advised. If you are holding it already in your portfolio, you could keep a stop loss from the moving average. The stock breaches is 21 DMA or 50 DMA. You can start trimming your positions. Next is Astral. I'll look into Astral as well. It's a very similar stock in terms of chart or price volume. It's very similar. It's a stage 1B flat base breakout and rebound, or you can say slight pullback has happened in this stock. It hit its stop loss as well on the day of elections. Good recovery from there, but it's not strong enough to take the stock above its pivot or above its previous highs. Currently, it is trading in the idle buy range, that is in the blue zone. But if you look at the ratings are not very strong enough for us to add or take into consideration. EPS is good at 74, but price strength is lagging at 45. When the overall market is doing good, this stock is slightly underperforming. That can be shown by the RS rating as well. In the current market, you'll see ample of stocks breaking out or doing good. There will be many outperformers. Always go with the leading stocks, or as Odil says, go with the leaders and stay away from the laggards. Though it's not a major laggard, but comparatively, if you talk, it's a slight laggard when if you look at other stocks which are doing very good in the current market. Next, we have few queries from the YouTube as well. That is Bajaj Auto. This stock has done very good for the last 1 year. You can see it's a very one-way trajectory for the from June. It was trading around 4,500 levels, and from there it almost more than doubled. You could say from 4,500 it is trading now at 9,600. So it's a clear more than 100% gain in a period of 1 year. So definitely a very good performer in the last 1 year, if you could say. It is definitely looking good in terms of ratings, especially if you look at the quarterly earnings section, the top bottom left. EPS has been consistently growing at 20 to 30% growth rate. Sales have also grown at almost 30% for the last 4 quarters, which is a very good sign. And return on equity is at 30%. It's a very positive sign. And normally we would say that the ROE is above 17%. We consider that as a very good, fundamentally strong company. But Bajaj Auto has a EPS or return on equity at 30%. Definitely a very good number. RS rating is also doing good. RS line has hit a few blue dots recently. But in the last three trading sessions, the stock has been coming down, but the volume is on the lower side. So it's not a major selling pressure. You could say it's a slight pullback. And it is trading in the idle bear range currently. As we speak, it is just 3% from the pivot. And the pullback has also happened on the lower volumes. So if the rebound happens on higher volume and the stock rebounds from here, and if it trades around 0 to 5 or 0 to 7% from the pivot, definitely you could consider for fresh position. There's no doubt about the company's performance. It has been a very good uh, leader in terms of two-wheeler segment in the country. It has been doing good over the years, not just the particular 1 year, but for historically it has been very good performer in India in terms of stock performance. Definitely, you could consider or you could stay invested in these fundamentally strong companies, and it is also a leading large cap stock as well. So the risk involved is also on the lower side. So similarly, the returns expected will also be on the lower side. But for the last 1 year, we have seen a gain of almost 100% gain. So that is not going to be a norm going forward as well, but anything around 30 to 40% gain over a period of 1 year is considered good in the investing cycle.
Uh, Raj, I can take Rajesh Expo. the stock has been the underperformer. It has not even single time participated in the last year's rally, maybe 1 2 days here and there. Otherwise, like the RS rating of 4, it's worst as stock can have. EPS of 14 is also very poor. Fund holding is reducing, and so it is trading below all its key moving averages. So there's no point in going behind this stock. And we at William O'Neill, we are not someone who is involved into bottom fishing. So we'll not suggest to go for this stock anytime when it is forming a bottom. At least a couple of quarters of good result and a good base formation about 200 DMA is needed. We can go to next, NCC. Yeah, so this is opposite of Rajesh Export. Like it has been a solid move in over the last 1 year, and it is continuing to move. So I think before election we had this in our portfolio as well at a time, and we booked a good profit. So overall, it's a very strong stock. If you can see the way it has formed after the double bottom formation in September, October, November. So there was a very strong rally. 50 DMA, the red line, always gives some good support. Maybe not exactly over there, then somewhere nearby it. We get a very good support near 50 DMA. And whenever the stock rebounds from there, you always see that it gives good return. The earnings as well as sales growth has been good. Number of fund holding has increased really well. Now it's 325. So this is just from the last quarter. पिछले quarter में ही इतना 18% increase हुआ है. Overall in last 1 year, that has been a very good increase in number of funds holding the stock. Broadly, it's a good theme. The government focus on infra is bound to remain. The Indian growth story without infra cannot be done. Okay, and the continuation of the ministry, as Raj already discussed, that has been positive for all these infra-related stocks. And NCC is involved in multiple projects, so there will be more such projects coming up. The order book will increase. The execution efficiency of the company has increased, and that will lead to more sales and more profitability. So if you're holding the stock, then you can continue to hold, and you can watch out for 50 DMA for profit booking or downside there. If you are not holding the stock, fresh buying, not an ideal idea according to O'Neill methodology. It is extended from its key moving averages and also from the pivot. So either let it come to 50 DMA या फिर एक और ऊपर एक base बनाया नया, तब we can consider. Third I can take is Pennar industry. The PAN industry has been excellent one, and a clear disclaimer that this is the part of our model portfolio, and it was ended June 11th, and since then it is up almost 6%. So today the action was really good. Today it was hanging over its buy zone, but today I think in the second half there was some very good action. So this is a relatively lower market cap stock, though 2,500 वाला stock है, but its operational efficiency is really good. And if you can see the number of funds that are now interested in the stock, that has been excellent. So last 2 3 quarters से उनका results का improvement हुआ है, that is also really good. The ratings are top notch. EPS, price strength, buyer demand. You can see there is a accumulation of blue dot. Okay, so it is continuously making fresh 52-week highs in terms of the relative strength. So these are the type of stocks when you go after them in this strong market, the probability of getting a return always increases in the market. So fresh entry not suggested because it is almost 10% up from the pivot. So you can enter it fresh when if it again falls to the buy zone, or whenever it makes a second base from here. So that is the ideal time to go for the stock.
Thanks, Rushit. I'll take in some queries from you. Can you give me Interglobe Aviation, then Titan? As you can see, the overall the airline stock has been doing very well. I mean, it's more than 54% from the pivot at this moment. Last few days have kind of been volatile. I mean, around the announcement, I mean, in terms of the election result and the ministries after that. So it's been kind of volatile after that. Some kind of, I mean, big red bars coming in as well. And one of the few stocks at this moment that is kind of trading off highs at this moment, more than 8.5% off highs below the 21 DMA. In terms of fundamentals, as you can see, last 4-5 quarter results have been very good. The stock has been doing very well in terms of sales and EPS. The operational efficiency of the company is improving, and that is why you can see the boost in the bottom line for the stock as well. The EPS have been growing very well, and that has led to a surge in the fund holding for the stocks as well. The overall again, till the budget point in time, there will be some kind of announcement for the sector as well, and that will lead to some kind of volatility with the stock. Uh, there has been good up move, but when the stock is falling, there is higher volumes as well, and that is why you can see buyer demand for the stock deteriorating. It's at C plus at this moment. Someone who's holding can continue to hold the stock as still the fundamentals continue to remain intact, and even the technicals have not gone that bad at this moment. If I mean during the rally, the stock very well held its 50 DMA during the entire time. It didn't reach to the 50 DMA. And if you go like deeper, not just this breakout and the past breakout, even the 200 DMA for the last 1.5 year, 2 years have been held. So going forward, I mean, 50 DMA can be a line where if you want to partially book or fully book, depend upon your risk appetite. And I mean, how long do you want to hold? I mean, and you can define it upon your risk appetite, but still 50 DMA becomes very important because the last set of or the last leg of rally, 50 DMA has been very important. New entry into the stock is currently not advisable. Let the stock form a new base. Maybe at that point in time, if uh, the buyer demand improves at that moment, that is the sellers, the heavy volume sellers decline and the heavy volume buyers come back in into the stock, then maybe that would be an appropriate time to have a look at the stock. The next can be Titan. Thank you. So, I mean, the stock is forming a consolidation base at this moment. But as you can see, technicals have deteriorated very highly, and around results, pre-results, I mean, result for the stock and even the election results. I mean, the result was not that at par in terms of expectations of the street or the market, and that is why you can see good um, sell off happening in the stock. And there's been two sell off, one because of the results, the company results, and the next one because of the election. The election one has you can see somehow recovered, but at this moment still trading below the 200 DMA, 50 DMA at this moment. Price strength of 24 is very poor at this moment, and even buy demand of C is not that great. So currently, technicals are very, I mean, in a very bad state at this moment. Uh, Going forward, I mean, the overall fundamental story in terms of uh, Titan being a leader in couple of segments, that is operate in terms of one gold in terms of jewelry, and the next in terms of I mean, wristwears and eyewears is definitely a good story to watch out for. Overall, the consumption pattern or the discretionary the consumption pattern is increasing very well in terms in the country. The overall per capita income is improving in terms of the people in India. That is leading to an increase in the disposable income as well. So overall, the story continues to remain intact, but technicals have deteriorated. So let's wait. Even in some time, there will be some announcement on the Q1 operational numbers as well that will provide some highlights on the company's various segments in terms of how they have fared in the last one quarter. Plus, results will be out in the next 20-25 days or so. So the stock is still 11% to pivot. I mean, there's still a good time to go. If technicals improve, if there is good guidance going forward, then maybe, I mean, at that point in time, the stock can be looked at. But currently, not in a space where we would like to look. No bottom fishing at this moment. So, I mean, I don't know, previous breakout people would have exited the stock when the stock had either breached the 50 or the 200 DMA. New entry into the stock is currently not advisable. The next we can look is Ashoka Buildcon. So as you can see, ratings are very good. I mean, hardly to speak anything on ratings front. Fund holding is also very good. Results apart from the last quarter, before that has been very, very good, as you can see. But considering the strong EPS strength, you can probably ignore that last quarter result as well. And the stock has given a very strong breakout in terms of the first breakout was not that successful. The re-breakout was very successful. That has happened with a lot many stocks post the election jitters had gone away, and currently the stock is probably in the ideal profit booking zone and not in the ideal buy zone. So new entry into the stock is not advised. Someone is holding the stock. If you feel you want to book out some profits, probably the ideal time to do so. If not, if you have higher risk appetite, then continue to hold it and keep the 21 DMA as your ideal, as your trailing stop loss line.
Thanks, Vakar. I'll take a few queries and I think we can call it a day for the session. I'll look into a few companies randomly. I'll select and we'll look into those stocks. There is one query related to automobile sector. JBM Auto. Currently, it is trading in a stage 5 cup with handle. I think we have not talked about late stage basis in this uh, webinar. I think this is a very good point to discuss as well. Stage 5 is considered a late stage base according to our methodology. And it is often mentioned in our commentaries and webinars and seminars as well that anything above stage 3 and stage 4 are considered risky propositions to add because the risk involved inherently in these breakouts is on the higher side. To know more about base count and base stages, I can browse through our learning articles. It is clearly mentioned how to read base stages. And as mentioned, it's a late stage base and breakout from here. The probability of those breakouts will be on the lower side. The stock is still yet to breakout. It's currently trading in the handle portion. It is still 11% to the pivot. There is a long way to go for the stock to break up. If you look at the earnings section, that is very tricky. You can say that the sales have increased in the last 2 quarters, but the EPS has been on the declining front for the last 4 to 5 quarters, which is not a positive sign. As mentioned previously as well, we are looking for a stock or company reporting numbers from 20 to 30% consistent growth. That is not there in this particular company. So on the canceling methodology, this company lacks on many parameters. Price strength is also on the lower side. It is 59, which is considered lower. And there is no formation of blue dots as well. That signifies it is a laggard in this particular moment. It has been a clear underperformer when compared to the Nifty or mid cap or any other benchmark index as well. So clearly, definitely, it is not advised to look in start positioning into this stock. We would advise to stay away from these stocks for many reasons. One is the late stage count, earnings trajectory going down, price strength on the lower side. These are the major reasons. ROE of 6% is also on the lower side. So there are many reasons for us to not add it to portfolio. And if you have taken already position, and I think it's better to exit at the current market price and look out for stocks which are readily available in the market, which are doing good and which have been leading the market in the ongoing rally. NetWeb has been asked more than a couple of times. I think it's better to look into this stock as well. I think more than a couple of times it is been asked. It's a recently listed company. You can say it's a less than a year of trading history for this company. And from there, it has currently it is trading in it has broken out from a stage to cup with handle. Ratings wise, it is looking very good. Top-notch ratings, as you can say. Most of the ratings, EPS is at 99. It's the highest in a company can get. Price strength is almost the highest as well, 95. And RS line has been forming blue dots consistently for the last month or so, which is very strong sign. Higher demand is also the highest level, that is A plus. So ratings have been very good. Price strength has a price volume action has also been very good. Let's look into volume section to understand what we are talking about. You can see blue bars are more in terms of above average volumes. Red bars are slightly on the lower side if you count those numbers. So definitely a good stock on the price volume action front as well. And currently it is trading 43% from the pivot. That is a way more extended from the pivot, you could say. Fresh addition is not advised at this current moment. And if you are, I hope you are already taken position, and that is the reason you are asking this question. It's a very good stock you have picked and has been given good returns from the breakout. You can continue to hold it because there is no major sign of selling happening in the stock. There is no a particular session where the stock has fallen down on heavy volumes. Volumes have been slightly near the average volumes, but that those volumes are not very considerably higher than the above average volumes. So you can continue to hold it. 21 DMA is still 10% from here. So if you have that risk appetite, I can take that 10% risk and continue to hold. Previously as well, this stock has rebounded or pulled back towards its 21 DMA, and from there it rebounded sharply. So that is expected in the future as well. So don't panic whenever comes pullbacks slightly 5 to 6% from here as well. But if this stock reaches a 21 DMA decisively on higher volume, definitely it's advised to exit because your profits will be eroded by the time you wait for 50 DMA. I'll take one more query, and I think you can uh, call it a day. Again, a very late stage based breakout. It's one of the rare companies which form late stage base, such as Seven or so. Oh, it's very rare to find companies like these breaking out from a base pattern and advancing from there successfully, and again forming a base pattern consistently or consecutively for a period of 6 to 7 base patterns. It's very rare, and this company has done very good in terms of that particular parameter because it is involved in a sector where the growth is still intact, and future projections for the growth is also expected on the positive side. The government's focus has been very heavily invested on the towards the infrastructure related on the railways, especially because of the overall logistics wise as well as passenger traffic as well, railways have been taking a very radical shift in terms of way we commute between cities and way the way overall population of India has been traveling has been taking a very good shift towards the positive side. The luxuries which were not seen or which were seen only in a few trains previously have been available on the not so higher number of trains currently. And the infrastructure developments or the spending has also been increased, and that has been a major focus. So any company in this particular industry have been doing very good and are also expected to do good in the future as well. And this because of late stage base, we are not very keen to add it to portfolio. But if you look in terms of ratings and other parameters, it has been looking very good. There's no doubt about it. Just because of late stage base, we are slightly, you can say, taking a back foot while considering it for adding. And if you have taken a position on this particular stock for the long term perspective, and we are like we say that you have taken a very good bet on the long term perspective, and we advise to hold it for the long term perspective as well, because as mentioned, growth trajectory in the railways in intact, and the future also we are going to see good measures taken towards the development of railways in the country. Thanks for joining today's stock Durbar. Uh, I think we try to answer as many queries as possible, but some of the queries have also been left out in this uh, webinar. But we are not or intentionally we are not left out those queries. But due to the paucity of time, as mentioned at the start of session as well, we are going to answer only few time limit. Few number of stocks. And if you still feel that your query is unanswered, you can write to us on our email, and we'll take some time to answer your query. Thanks everyone for joining once again for the stock Durbar. Tomorrow again we'll be back at 8:45 in the morning for our pre-bill. We hope to see you guys there as well. Thank you everyone for joining this session.